Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. Today is 2026, July 3rd, and the market is basically asking one question. Is this a smart rotation or just investors panic shopping for safety, like it is a financial grocery store before a storm?
And the grocery store is dramatic today. Gold is up, eggs are in a price-fixing settlement, AI tokens are pretending to be crystal balls, and data centers may need backup power because apparently the cloud also gets heat stroke.
We will keep this practical. 5 signals: gold and Fed expectations, AI token market psychology, Gulf Airlines chasing aircraft delivery slots, a $3.3 million egg settlement, and heat wave pressure on the U.S. power grid.
Story 1. CNBC reports gold is set for its first weekly rise in a month as investors scale back bets on a looming Fed rate hike. Simple version, when people think rates may not climb as hard, gold stops looking like a shiny paperweight and starts looking like portfolio insurance.
Exactly. Gold does not pay interest, so when expected rates rise, gold often struggles against cash and bonds. When rate hike fears cool, the opportunity cost of holding gold falls, which is why investors start giving it attention again.
I half disagree with the gold fan club, though. A little gold can be a seatbelt, but some people treat it like a magic dragon guarding retirement. If your whole plan is, quote, shiny metal save me, that is not investing. That is medieval budgeting.
Story 2. Bloomberg says investors are tracking AI token prices for clues on where the volatile AI trade goes next. This matters because AI enthusiasm has spilled beyond listed chip and cloud stocks into crypto-style instruments that can move faster than the fundamentals.
It is basically like checking your teenager's playlist to predict the economy. Maybe it tells you the mood, but if you build your retirement allocation around it, you may end up financially grounded. Tokens can show risk appetite, not guaranteed truth.
That distinction is key. AI tokens may be useful as a sentiment gauge, especially when investors are rotating between semiconductor winners, cloud names, and speculative crypto plays. But for normal investors, the action step is not chasing every spike. It is asking whether your AI exposure is concentrated, liquid, and understandable.
I mocked the playlist idea, but I will reverse a little. When speculative assets move first, they can warn you that the crowd is getting either greedy or scared. Just do not confuse an early warning system with a financial GPS that also makes coffee.
Story 3. Bloomberg reports Gulf carriers are eyeing Boeing and Airbus jets as Air India weighs possible delivery delays. In plain English, if one airline steps back from future aircraft deliveries, another may grab those earlier slots because planes are capacity, market share, and future revenue on wings.
So aircraft slots are like restaurant reservations, except the table costs tens of millions of dollars and comes with engines. For investors, this is a capital expenditure clue. Airlines expecting demand will fight for capacity, while airlines worried about costs may delay.
Story 4. The New York Times reports egg producers will pay $3.3 million to settle a federal price-fixing lawsuit, and they also agreed to donate more than 53 million eggs to food banks and nonprofits in 17 states. The simple finance lesson is that competition policy can affect grocery bills, not just courtroom headlines.
53 million eggs is a number so large, it sounds like a villain's breakfast plan. But for households, the point is serious. When everyday items feel manipulated or supply constrained, people lose trust in price signals, and that changes spending behavior.
Story 5. The New York Times reports that amid triple-digit temperatures, data centers may be ordered to use backup power to reduce electrical grid strain. This links two massive trends: extreme weather increasing demand for electricity, and AI infrastructure consuming more power at exactly the wrong time.
Normal people should care because grid stress can show up as higher power costs, reliability worries, and political pressure on utilities and tech companies. The cloud sounds weightless, but the electricity bill is very much wearing steel toe boots.
Quick recap. Gold is telling us rate expectations matter. AI tokens are a sentiment signal, not a strategy. Aircraft slots show corporate confidence. Eggs remind us inflation is personal. And data centers prove infrastructure risk is now an investing topic.
Your action step. Check whether your portfolio is overexposed to one story, one commodity, one tech theme, or one heroic breakfast item. If this helped, subscribe to BD Daily Finance News Podcast. Like the episode, and tell us in the comments which signal you trust most. Gold, AI tokens, energy, airlines, or eggs.